Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be talking about the Dow Jones Industrial Average, and this is going to be the first video in a long series of videos in which we basically go through the Dow, each single stock in the Dow Jones Industrial Average, and do a stock analysis on each of those stocks. So I actually sort of got this idea from Jimmy from the YouTube channel Learn to Invest. He did a similar series, and initially on my channel I sort of did a stock analysis series for my portfolio, and so I've kind of gone through all the stocks in my portfolio and done stock analyses on those companies. So I figured I'd do the Dow, and I do own some of the companies in the Dow, so those will be duplicates, but some of them have been like a year or two since I've done those stock analyses. So I think there will be, even if I've already done an analysis on that company, there'll still be some good information to add. So in this first video, we're just sort of going to talk about what is the Dow Jones Industrial Average, and it's not really as intuitive as a traditional index fund like an S&P 500 index fund. I guess one could say it is more intuitive in the sense that it's a little bit simpler on the surface, but it's also a little bit more complicated and doesn't make quite as much sense once you kind of get into it. So, obviously, just for people who have no idea, the Dow Jones is basically a company that was founded in the late 1800s by, Charles Dow and Edward Jones, and then this other guy, Charles Bergstresser. I don't know why that guy got left out of the name. Feel bad for him. But they also founded the Wall Street Journal as well. It's pretty cool that that's, around to this day. I'll leave links to these Investopedia articles in the description. They're pretty informative. So he basically wanted to, I guess I said he as in Charles Dow, but the three people wanted to, create this sort of index to track the overall health of the U.S. economy. And so that's what the Dow Jones tries to do. So right now, the Dow Jones has 30 companies in it. It initially launched with just 12 companies, but now it has 30 companies. And what else did I want to talk about in this article? Yeah, so it's 30 of the most traded stocks on the New York Stock Exchange and the NASDAQ. And I'm not exactly sure how those get picked, if it's based on volumes or just like votes. I'm not exactly sure, how those different stocks get picked, because, sometimes some will be taken out and others will be added. So it's kind of interesting why that is. But the one thing I did want to talk about is, how the actual price is calculated, because, that is a little bit more complicated. And I thought it talked about it some in this article, but we're just going to go to this other article on the Dow divisor. So basically, with a traditional index fund, like the S&P 500 index fund, maybe like VOO if you're investing in the Vanguard ETF version, for example, what happens is the companies are, rated by market cap, and then, the total market cap of all those companies is added together, and, then you see each company's market cap is like some percentage of the, sum of their market caps, and then that's that company's weighting for their price towards the, actual price of the index. So like Apple might be like 5% of, the S&P 500. So when you go to calculate the price, you would take like the price of Apple times 0.05 and then add it to the price of the next stock times whatever percentage it is, and just keep going. And that sort of makes it so that the higher market cap companies, you might assume that they're going to have a bigger impact on the economy, or at least they could. So in that case, that's sort of taking that into account. But the Dow Jones doesn't really do that. It's just purely based on stock price. And so originally what happened is they just added up all the, prices of all the stocks and then divided it by the number of companies there, So I think it said initially, it was just a, simple division problem. So you just added up all the prices of the stocks and then divided it by how many stocks were in that index, which I'm not sure where it said that. But How it works now is we can actually see, if we go down here, the current Dow divisor is like 0.1517 dot dot dot. It's a really long decimal here. And the reason for that is that they change the Dow divisor over time as things happen with the companies, like for example, stock splits. And for example, if there's, some special dividends or spin-offs, or when some companies are added or subtracted. Because if, for example, there was a stock split on one of the stocks in the index, and then the price of that stock, say it was at $1,000 per share, and then it went down to $100 per share if they had a 10-for-1 stock split. Well, that would drastically affect the price of the index, and it could make the index look like it's just going down, when in reality the company just had a stock split, since this index is purely just based on the price of all the stocks in it. If that makes sense. So that can also have an effect when one company is taken out and one company is added. I think Salesforce was recently added and Pfizer was recently taken out, and the stock prices of Salesforce and Pfizer are drastically different. So if you just took out Pfizer, which is, say a $50 stock, and then put in Salesforce, which is say a $200 stock, that would affect the price of the average if you just averaged it purely with a arithmetic average there. So that's why they have that Dow divisor, to sort of smooth that out and make it so that the price before any action happens is the same as the price after. And to sort of demonstrate how that worked, I made this spreadsheet. Of course, have to make a spreadsheet. So basically what this does is it just lists all the companies in the Dow Jones Industrial Average, their ticker, their name, the current price, and then I got the market cap because I don't know, I thought that would just be interesting. And then, so what I did here is I just put in the Dow divisor here, and then I summed up all the prices. So the sum of all the prices is $5,289. And then I calculated it, the average, the Dow Jones price, based on taking the sum of the averages. You can see right here, I just did the sum of the averages divided by the divisor. And then the second one here, I use like a Google Finance call to grab that price, and we can see they're the same. So that just sort of explains mathematically how that works. And I added this tab here for analyze. So what we're going to do is we're going to go through every single one of these companies and do a stock analysis on them. A lot of these companies I'm less familiar with, like American Express, Amgen, Boeing. So I think it'll be fun to do these stock analyses. Obviously some of them like Coca-Cola, Johnson & Johnson, JP Morgan, I'm more familiar with, but I think it'll be a fun series to do, and I hope it's helpful for all of you guys, and can just spark some conversation, I guess, in the community. So we're gonna do it by market cap in ascending order. So looks like the first company we'll do is Walgreens Boots Alliance, and I sort of added this analyze because at some point maybe some of these switch in market cap. Like you can see right here, Intel and Nike, their market caps are very close together, so maybe at one point they switch, and then it would be hard to tell, or easy maybe to forget one of them in doing that stock analysis. So while I did that, when we analyze it, we'll just bring our check mark in here and it'll turn green and look nice. So that's pretty much all I had for this video. Let me know if you have any questions about the Dow Jones Industrial Average or how it's calculated. I think that's pretty interesting, how they calculate it, but I think it's sort of, on one hand, it definitely makes sense to me, how they're using that Dow divisor, because that helps them, keep the price consistent before and after any events happen there. But at the same time, it doesn't make the most sense to, say that just because, Boeing, for example, is $188 per share, it technically has more weight in the index per se than Apple, which is, maybe $170 per share, when Apple is, 20 times the size of a company as Boeing. So I think it has its pros and cons, and so do other indexes. So it's just something we're going to look at, and hope you guys enjoyed the video, and thank you for sticking around to the end. I will see you in the next one.